In this video, I'll discuss the Q4 FY25 result and Concall of Aptus Value Housing Finance. So, Aptus Value is an NBFC working in the affordable housing finance segment. Its 60% AUM comes from the affordable housing loan, and then 20% AUM comes from the small business loan. They have a small division of business loan also, and then 14% quasi home loan. So it is kind of a lab. So that is the AUM mix, and they mainly cater to the self-employed category. The 80% AUM comes from the self-employed pupils, and as Aptus Value is a affordable housing finance, its average ticket size is around 9 lakhs, and if I see the average yield of each segment, then their business loan have the highest yield of 20%. That is why their portfolio yield is high, because their 20% of AUM comes from what? Comes from small business loans. That is, from that they are getting a yield of 20%. So they get a higher portfolio yield at a overall level. So that is the point here. And if I see geographical presence of Aptus Value is very concentrated in some places, like they are mainly a South India based player. They do not they do not present in like Gujarat, Maharashtra. They just entered Maharashtra and MP. They are not present there. They are mainly a South India based NBFC. Mainly their 33% AUM comes from Tamil Nadu, 42% comes from Andhra Pradesh, and then 16% comes from Telangana. So if we see, they are very much concentrated in some states, and that is a risk factor also in this company, because if we see India Shelter, if we see Home First, they are fairly diversified all over the India, like over 10 states. Over India Shelter, if I am not wrong, India Shelter is present in like 15 states. Home First in around 13 states, if I am not wrong. And but if we see Aptus Value, it is mainly present in 5 states, 6 states, like. And they recently entered the Odisha and Maharashtra market also. Before that, they were present in Andhra Pradesh, Tamil Nadu, Telangana, Karnataka. That's all. So that is the geographical presence. And if I talk about now, I will talk about the result of Aptus Value in Q4 FY25. So at first, AUM growth. If I see, they have a AUM of 11,000 crore. They grown their AUM at 25% in this quarter. And if we see the state-wise AUM growth, then Tamil Nadu, they had some kind of problem in Tamil Nadu from last 1.5 year, 2 year, and this quarter they looked really good in Tamil Nadu. Their quarter, they have grown AUM 8.7% in this quarter from the last quarter. So quarter on quarter a good growth, and if we annualize this, the growth becomes over 30%. And if we compare it to the whole year AUM growth is 14% in Tamil Nadu, but in this quarter they have done a growth of 8.7%. So that is really good, that one of the main states is coming back, which was a lag for few months or quarters. And so that is a good news for them and for the shareholder also, for the company. And so that is the Tamil Nadu growth. And if we see also from the last quarter they have opened I think 4 new branches in Tamil Nadu, but if we see in last 1.5 years they did not open any branch in Tamil Nadu, but from the last quarter they have started opening branch in Tamil Nadu also. So that is a good news. And if we see Odisha and Maharashtra having very low AUM in them, but their AUM growth is around 250% year on year. So that is also a good thing for the company, that the Odisha and Maharashtra is going very fast pace, so that the diversification becomes easier quickly. But yeah, if you see the diversification, it will take time. It will take time of 5-6 years. So as a company, the diversification is really important, because if you do not diversify, the risk of a particular geography becomes higher. So how much you diversify, that is good for the company. That is the thing. So that is the AUM result of this Q4. And if we see the guidance, they are guiding us for 20 to 30% for the next 1 year, like FY26. They are really consistent with their guidance, and they are giving their guidance around 30% from last few quarters. Yeah, they are lagging in some quarters, but yeah, it's okay. It is a part of the business that you sometimes may reach the guidance, sometimes you may not. But yeah, they are not missing by much. This quarter you can say that they are missing by 6%. So that is a thing we have to see in the next quarter also, that where the AUM growth is going. But yeah, it is the guidance that they are giving a guidance of 28 to 30% AUM growth for FY26, and they are saying that where the growth will come. One is the new branch in new states like Odisha, Maharashtra. Second is new branch in the existing states like Tamil Nadu, Andhra Pradesh and all. That is the second growth generator for next few years. And the third is the productivity improvement of loan officers, the increase in ATS level without impacting LTV or installment to income ratio. And that is the point. They are saying that the next growth generator will be this. Like Odisha, Maharashtra is one of the main thing in their company, that where the portfolio of Odisha and Maharashtra is going. So that is the thing with AUM. If we see the disbursement, that have grown about 9.9%, like 10% in this quarter. So it may be low, but company management gave a clarification on that. They are saying that if we see last year's Q4, the disbursement had spiked up towards like 950 crore from 750 crore level. So that is the base effect they are getting in this quarter. But if we see the half yearly growth, that is around 15%. So yeah, on the par if we see. So that is the thing. Management is saying that because the disbursement had spiked up in the Q4 FY24 from 750 level to 950 level. That is why the disbursement growth is looking like it is low in this quarter. But if we see the quarter on quarter increase in disbursement, that is around 15%. So yeah, good amount of increase quarter on quarter. So that is the disbursement growth in this quarter. And if we see the guidance of disbursement, they are guiding us for 24 to 25% in FY26. Again, as the if we see the Home First management is saying, always say that they need 22% of disbursement growth to grow the AUM book at over 30%. So yeah, if we see Aptus also, yeah, they are giving a guidance of 24 to 25 and also AUM growth of 30%. So it is in line with them. So yeah, it is good enough guidance from the management. And if we see the asset quality, GNPA and NPA, GNPA is at 1.2% level, and both GNPA and NNPA are stable in last few quarters, like 4 quarters, 3 quarters. They are absolutely in a range bound kind of position. So yeah, there is no problem in asset quality in affordable housing finance segment. If we see others lender also, like India Shelter, Home First, Avas, anyone, you can pick anyone, and if we see there is no problem in affordable housing finance segment, unlike the MFI and business finance. And if we see Aptus value have a small category of business finance, but yeah, if we see then also the GNPA and NNPA level is really stable in their company. Like GNPA and NNPA, 30 plus DPD and 1 plus DPD both are in a stable position. And if we see in this quarter, they have improved their 30 plus DPD and 1 plus DPD by 30 to 40 BPS compared to Q2 and Q3. So that is also a good point for the company, good thing for the company. And credit cost also, if we see, that is around 30 BPS for last few quarters. So that is the thing we have to see in the future also, that where the asset quality is going. If the asset quality is right, there is no problem, because one thing is with NBFC is that at first you have to maintain your asset quality, then you look for growth of AUM, growth in disbursement. So main thing is that you have to maintain your asset quality. That is the first criteria for any NBFC. So that is the thing with asset quality. And yeah, if we talk about the credit cost guidance also from the management, they are guiding us for 40 to 45 BPS credit cost. That is, I think that is on a conservative side, and they are saying this, that 40 to 45 BPS, because if we see now, they are at 30 BPS, and in the past quarter also they are like 35 BPS kind of credit cost. So that is good enough result from the Aptus value. And now if we talk about the ROE, ROE is at 19.6%. So if we see Aptus value have the highest ROE in this category of 19%, over 19% if I see. So they are guiding us for 22% ROE by FY28, and that is a long way to go, because we are now in FY26. We did not start yet. FY26, FY27, FY28. So fair amount of time to reach 22% of ROE. If we see ROE year on year increase, that is around 250 BPS year on year increase in ROE, and 112 BPS increase in quarter on quarter. So ROE is growing absolutely good, in a good pace. So that is also a good point for a company, that when a company grow their ROE consistently, that is always good for a company. And if we see the leverage ratio of Aptus value, it is around 2.5%, and the management is saying that they can go up to 4x to 5x kind of leverage. So if we calculate, if we see they are increasing their leverage by 10 bps every quarter, around 10 bps every quarter. So at this pace, the next equity dilution will be in FY30, FY31. So the company, if we see, it is a very long time. We are now at FY26. We do not start the FY26 also, and if we see, we have around 5 to 6 years for the next equity dilution. So it is a long time to go for Aptus. They are at leverage of 2.5x, so it is nothing for a housing finance company, and they can go a long way. They have a long way to go. So yeah, they are doing good in this segment also, that the leverage ratio is should be around 5x, 6x kind of leverage they can do. And yeah, good enough guidance from the management. And what we have to see, that as a NBFC, as a bank, as a investor of the company, I would look for a NBFC or a bank who is having a higher leverage, but their asset quality is good. I would like a bank which is doing a high leverage business, like 5x, 6x, 7x, because banking and NBFC lending, money lending is a leverage business. So the more a NBFC can leverage their equity, that is, the more the company would get better, if we see enough profitability perspective and all. So that is a point, that Aptus value, I think Home First targets about 4x kind of leverage. India Shelter also like about, if I am not wrong, it is around 4x kind of leverage they are comfortable. And if we see the if we see one thing, just I have written down the leverage ratio. So yeah, if we see India Shelter is also saying about 4x kind of leverage. And if we see Aptus value is talking about 5x leverage, and that is why Aptus value is better in this case than India Shelter, if we see. But yeah, all depends on the asset quality, all depends on the AUM growth. Because see, on thing, that if a company is not targeting a higher leverage, but their AUM growth is high, so I would like to go with the higher AUM growth company, in spite of going with the higher leveraged company. So that is the point with the leverage. And so yeah, if they increase their leverage in this space, the next equity dilution should be around FY20, FY30 or FY31. So that is the thing with leverage. And if I talk about the spread is also in a range bound is in a range bound between 8.7 to 8.8 kind of 8.6 kind of level spread. So spread is also, if we see for the last few quarters, it is consistently around 8.6 to 8.7%. And if we see, as the rate cut have happened in last few quarters, and we are expecting one or two more rate cut in the future also. The rate cut, if the rate cut happens, Aptus value will benefit from that, because they are around 30 to 40% book. I am not have the exact percentage, but yeah, 30 to 40% book is on the floating rate. And if we see their asset side, most of the asset is on the fixed asset. So if the rate cut happens, their borrowings will get re-rated downward, but their asset side, if we see their asset side, that will not be down I mean derated, and that will stay in that level. And Aptus will also saying that they will not pass on the benefit to the customer. And if we see the BT out rate also, they are saying that in the past, when the rate cut happens, we usually do not pass on the benefit to the customer, but the BT out rate also keep in a range. So that is the point. The company is doing business for last 10 years, 15 years, so they have seen this kind of trend in this kind of scenario. So they are saying we will not pass on the benefit to the customers, and that is why we will gain from the rate cut. So that is the spread guidance for the. And if the rate cut happens, the spread should get better in future also. So that is the point. And if we see the expansion, in this year they have opened around 38 branches, and they are saying that they will open 40 branches in the FY26, and out of 40, 10 will be in Maharashtra and Odisha. So that is the guidance. They are doing a good enough job in the branch expansion also. And then if I talk about the valuation of the company, see one thing, that the PB ratio is around 3.8x. And if we see the Aptus value have highest ROE, and they have a long way to go in the future also, because as I said, the equity dilution will happen around FY30 31 if all goes in a right direction. And so Aptus value have a long way to go in front of them. So if they can grow at a 30% of AUM, 30% growth in AUM, if they can do it, if you can make multipliers from here also, if I see the valuation, that is fairly valued, absolutely 3.8x PB ratio. So it is fairly valued. And the thing is, if, as I said, if Aptus value can do a 30% AUM growth in next few years, as their leverage ratio is really low, they can go long way. And that is the point with Aptus value. And I do not think there is any point I missed. So that's it for the video.